Ouch. Is it really time to sell first and ask questions later? Because some people are. They think the AI rally is over. Tesla's down pretty strong. Nvidia's down. Google's down. Amazon's down. It's pretty red out there. Palantir, Oracle, pew, pew, pew. Yes. So this is where time can be to your benefit. So if you're watching today's video, I know I'm publishing it quite late today, but here's what I want to tell you. If you give this market time, you will go through these cycles up and down and all around. You can go through emotional cycles and feel like a total loser. Yeah, not every day we can be a winner. Some days we have to feel like losers. Oh my God, time to sell everything, time to get out. Who shorted the market? Why did the government allow this to happen? My retirement money is lost. Does that sound familiar? That's just called being a human. So if you happen to be a human, you happen to be vulnerable to everything that happens here, the slope of hope and the wall of worry. It's just called the human psyche. And if you can learn what that means, you can make money. You can make lots of money. So is it really time to sell first and ask questions later? We're going to talk about that today because honestly, it was a pretty red day out there. If we look to critical mineral list, which is an area that I'm quite focused on right now, yep, it's pretty red out there. Slammed, slammed, slammed. People are worried about how the power for all of these AI data centers are going to get powered. So even for something like, let's go to MP, that's the big dog. What I'm really watching for here is really going to be the previous all-time high. And if you don't care about critical minerals, that is totally fine. But if you care about AI or you care about the reason why these things are down, it's because of exactly this reason. To make energy or to make a car or to make a solar panel or to make a silicon chip, which can turn into an NVIDIA chip or an Intel chip or whatever, it requires a lot of materials. Sometimes they're called critical. Sometimes they're called metals, but they're all important. They're called commodities. So here's where we were before the pump. Here's what we went to. Here's where we are now. These people probably feel like losers. I would. And I do on certain stocks right now. Trust me, I feel like a total dirtbag. I feel like, oh my God, how could this happen? I thought my companies were great. They're going to come back, right? Nope, they're not coming back. Time to get out. 100%. I got to sell everything. I can't afford to lose more. Who shorted the market? If I look at this chart, I don't own it, but I can understand how people feel when I look at the chart. They're beaten down. They hate it. They're ready to fold. So if now we get a little bit of volume here because they got very excited at the top, they haven't folded. So if we do see maximum volume, which means capitulation, that's the same thing with the broader market. These things just have a lot of beta. 12%, that's a big move. 11%, ouch. Pew, pew, pew. Right? 9% apiece. Look at the S&P, down by 1.6. Bitcoin's below 100,000. The NASDAQ is down 2% today, but we're still above the 50 DMA. So I talk about this frequently. What are you going to regret more? I don't know everything, but I do know about regret. I know all about that. I regret a lot of things. What's really important to me is what I'm going to regret more. So I try to make a plan. And when this happens, sometimes the worst case scenario is not the worst case scenario. What I'm trying to do is to be less surprised, not unsurprised. So right now, it's palatable. I'm not very happy with what is happening because one particular holding, yes, it kind of feels like the worst case scenario. But I feel very good about it now. I did more research. It's why I'm publishing this video a little bit later. But anyways, it's palatable. I would be a liar if I said, oh, yeah, everything's totally fine. I feel really good about everything right now. This is totally fine. It's not. And if you own something like a Palantir, I don't, but a 6% decline in one day, yes. Here is what the average human does as their account goes up. It doesn't matter how much it is. Your account goes up, you start spending more in your head. And if your gains are unrealized, which means you haven't sold and withdrawn the cash, they're not real. So in your head, they're real. Oh my God, I can get the car, I can go on the holiday, I can get the girl, whatever, I can get all these things, I can get the house. And then suddenly when your account goes down, you're like, oh my goodness, these are stinks, these aren't stonks. And then you get really worried. You hear about things like Michael Burry and blah, 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 blah. And that's really what you're falling into here. You don't know what you don't know. So as you're falling down the peak of Mount Stupid down to the Valley of Despair, you just don't know that. Looking back, you can understand, oh, I was kind of a dumbass up there. Oh, yeah, that was me where I was really in despair. But over time, you go through those cycles over and over, right? Oh, I'm a genius. Oh my God, I know nothing. I know everything. I know nothing. Yes. If you want longevity in this business, you have to learn how to avoid what you're going to regret. So, should you wait, buy, or sell? This is where, if now you understand on a day like today, most people, as we're going up, feel like this. But me, I'm a scaredy pants. And that is why I've raised a lot of cash. I've shown you this before, but it should not be a surprise. I'm at 88% cash in this account. What does that mean? I'm scared. I'm scared of days like today. So, yes, it's less painful. I did lose money today. I lost less than the market. I'm not going to talk about my account because it's not helpful for you. My goal is to help you understand what we can do from right now. Like I mentioned, if you're watching today's video, it's coming out later, and it says, "Do we sell first? Sell first. Ask questions later." I wouldn't. I would go back and make a plan, because for me, these are exactly the days where I regret exactly what's happening right now. Oh my God, I didn't sell enough, and now we're going down. Yeah, that's today. Today's the day where you feel good. You're like, oh my God, I'm a genius. And I said that about Palantir. Do you remember what I mentioned on earnings? I'm not a know-it-all, but I said, I don't see what the upside is here. Everyone said we're going to go gap up. We're going to go to new all-time highs. And it didn't happen. Oh my God, we're just below support. Like, cry me an effing river. Like, that's the joke I made about Alex Karp, because in hindsight, you're like, yeah, come on, this guy's being a total douche. His stock is still up dramatically. He's like, oh my God, you shaved off a little bit here. Yeah, but look how much you gained. It's all about perspective. But if you spend more as your account goes up, when it starts going down, the things you already spent in your mind are gone. That's what's painful. And then admitting that as a man, oh my God, that's like almost impossible. So yeah, it's really red out there. And I'd be arguing if today was a beautiful, great day for me. It was actually quite stressful. I was actually planning to get other things done today, and I did not. So here's what we can do. We can ask ourselves, are we above the short-term price or are we not? We had a long-term target of 690. We can throttle. We can go to dramatically stretched levels. But if we crash land on support and we're above it, what does that mean? It's support until proven otherwise. The last time we got to move down to here, here's where we were. We're actually higher. We have a weekly higher low, even without looking at it. And the volume is elevated, but it's not crazy. It's not a liquidation like the last slam to the 50. So low, higher low, higher low. If you could please do me one huge favor and consider smashing the thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. So as we go forward here, the really big question is, are you actually prepared for more downside? We can look at notes, and I gave you tons of notes. I mentioned this over and over, and on Monday again, 679.24. Don't forget about that number. It's a really important key area to pass, or we're going to reject and go for a daily gap fill. Oh my FG, right? Watch for clues here with our target, which is a proprietary tool that we built. But anyways, wasn't that a killer note? 679.24, that's the weekly low. Okay. And if that area rejects, we're probably going to go for a daily gap fill. Isn't that exactly what happened? Look at the gap fill, 671.08. Look at today's low, 670.5. It's like basically 50 cents below. We're not even below support yet. And I know if your account is down today, you're like, that's right. We filled the gap. So the entire time we're going higher, it feels good. It feels great. The reason why I regret when we go down more than when we go up, keyword there is more, is because for me to lose, I don't know, like let's pretend I make $100. Let's say $1,000. Make $1,000. We go higher. Okay, great. I feel good about I don't feel good about losing $1,000, but I feel terrible about losing $1,000. The loss feels like 5 to 10 times worse for me. So I feel really good when we go higher. Again, good, but I don't feel great or excellent. At a certain point, when you've been trading long enough, it doesn't really do that. That's why I usually just do this. It's a way for me to say that, yeah, the market's going higher. I regret that I don't have everything I did, but I regret this more. And on today's like today, it's a great reminder for me. I am human. I do the exact same things everyone else does. So what do I do if I own or don't own? Well, I've been telling you for a while, I've raised a bunch of cash. So yeah, I'm down today, but I'm down less than I would otherwise be. This is palatable or tolerable. It is not enjoyable. It is not fun. It is not something I wanted to happen. Remember, these have been easy dollars. We got a couple of hard pennies squeezed out of our accounts today, but I would personally not stress. And I'll tell you the reason. I'll tell you the reason why. We're above the short-term price. Yes, we fell below a key area. And tomorrow we close out the weekly chart like we're still green. It's another full candle. That's 3 in a row. What happens after 3 in a row? Well, 2 are green, 1 is red. So it all comes down to next week. We have an inside bar. I think on this morning stream, I mentioned that watch the closing price. That's the open and close. It's the real body. It's the O and C. Last week we opened at 685.6. Where's our high? 684.96. Basically around the round number. And then what? Slam it. Yeah. We're just down to support. I know that sounds crazy, but remember, there's going to be a lot more trading. This rally is really, really strong. I think what's happening is that if you're in certain stocks that got really drilled today, it's all about perspective. Like Tesla, let's look at it. Yeah, I got hit hard, but like, oh my God, it's still like really strong. If we look here to the daily chart, like, yeah, we're below it now. Tomorrow, if we close below again, yeah, then we can slide down to the 200. And this is because one daily close below the 50 is not a trend change. Those can be traps. So here's what I would do as an example with Tesla. We have a golden cross or golden momentum. We lost the short-term price, but have a little look of a close here. Look how many gaps we got. We got 1, 2, 3. If in hindsight, again, pretend you went to sleep for about 2 months, you came back, and I told you, hey, Tesla filled those daily gaps. And then it rallied all the way back. Oh, I knew it. I knew Tesla would come back. Yeah, we go back to where we were. The question is, do you want to go through this emotional roller coaster if it does or does not happen? Because the odds have now increased. We've gone down a little bit. We've gone down a little bit more. Now we can go down by a lot. It could tank down to support, which is where? On the 200 DMA. Happens to correspond with the last gap. There's one there. There's one there. There's one there. Did we fill this one? 396, sorry, 3963. 3966, yes, by 30 cents. An extra 30 cents, sorry. So by plus 30 cents, if you were waiting for that gap fill, where you actually regretted this is where today you'd have a chance to jump right back in and buy more. I'm going to regret if we go lower. Hey, we're lower. Great. Thank God I sold half. I can buy it back. Or I can choose to not. I just ask myself the same question. If I go to one of my holdings now, I'll do it for you. If I go to my account, let's look at one right now. I was thinking of firing some and actually did fire one. I sold Wolf. But as I look through here, I'm like, well, this thing's just not been working. And I've fired it before. I sold it all out and then I bought it back. I like the company fundamentally. Technically, it's just not working. So what do? Do I sell more? Already sold half for a loss. It's the only one on here that is currently with a realized loss. It's my biggest position though. As small as my positions are, that's the biggest one. It's the one I want to be up the most. My second biggest position, pew. Yeah, I got hurt on that one too. So that hurts my ego. As much as all these ones are doing well, I still focus on the negative because again, my top two ideas as of right now for waiting, I'm voting and saying, I like these two the best. And the market's saying, I'm not sure I agree with you. Taking half of 1% out of my account. That doesn't feel good. So what can I do? I just ask myself the exact same question. If I didn't own it now, let's look at those two actually. Let's go here. So I talked about Tesla. I told you, if we go down to support, I'm going to call you a wussy just like me. Oh my God, you sold it on support. Sell it, trim a little bit now. And I just told you, I sold back half of my biggest position for a loss because I told myself this at this exact moment. I'll go back to here just for clarity. When I go to here, when a number goes negative, as an example, that means it's below. That one's an anomaly. Let's go here to Tilray. Oops, let me go back to my sheet, highlight that row. So right here, what I'm showing you is that there's a buy pocket, an area where I should want to buy more, and we're below it. So I can be very tempted if now in the moment during training, I say, screw it, I'm going to wing it. I'm going to go buy more. I shouldn't. The reason why is because that was my predefined support area. We're below it. So what that tells me at this price of 113 is that we're below a predefined area where I said I expect to find buyers. We didn't. We're below it. So what should I do? Well, this position happened to be good still. It's still up very good, very strong, but it's now trimmed to a point where I can't trim anymore. I got to let it go. I got to fire it. So I have to decide now on the weekend I'll do it, whether I'm going to do anything with it. I'm not going to do anything today, but my predefined area is telling me I'm wrong. I look through this once a week. So sometimes it works out really good, like this stock here. Like, yeah, on a day like today, you guys want Playboys. I know why. But anyways, when they go negative like this one here, I have to continue to move my support lower. All I ask myself is this. All right, the stock's not working for me. I'm not a winner on this one. I'm a loser. I feel like a loser. And when I look at the chart, it's giving me feedback. I'm not so hot. So, all right, what do? Well, I would buy it again fresh. But here's my regret. If it goes lower, and it did. So even though I was willing to stomach the loss, it still hurts me when I see it. So I ask myself this. All right, well, I told you, I sold some back, and now the losses, I sold half back. The losses actually doubled. Would have lost twice as much. So I can tell myself this in my head. All right, well, it was my top idea. It went lower anyway, but phew, thank God I sold half of it because I have the option to buy back for a smaller loss. If I would buy it again new, and if I wouldn't, I let it go. I fire it. Again, sometimes it works, sometimes it doesn't. Here's my closed position. Again, I'm not perfect. Look at all these mistakes I made. Make tons of mistakes. It's okay. My goal is not to be perfect. My goal is to be profitable. So as I show you these best practices today, I'm trying to show you that the doctor takes his own medicine. Yes, today was painful. Yes, today is very. It's an awakening. It's a reminder that if I'm not mindful of where we could go, what if we do go there? You're gonna have the same regret I do. You're human, right? All right, so I'm still watching. Hell, still haven't made a plan. Do it now. Pause right now. Just follow these steps. Go to the third or second link in the description. It says free notes. These are free. These are my best practices. The most important ones at the top, by the way, in case you're missing it. So make a plan now. It's never too late. If we go here to say, let's go to Under Armour. I don't want to make my videos too long, but today I think people might appreciate if you're still watching. So, oh, great. So this stock's POS, Justin, right? Piece of dog shit here. Yeah, it is. Still like it. The reason why I like this company, what's the news here? Oh, cool. Yeah, let's take some more charges here. Oh, yeah. Oh, my God. All right, they lose money. So you say don't buy companies aren't profitable. Yeah, well, this one here, again, I have my own formula for deriving what to buy. My system liked it, and then it went lower anyway. So I was wrong. The turnaround's taken longer than I thought. Kevin Plank, come on. Company loses money. I like the fact that it's a ubiquitous brand. Everyone knows that brand. There's brand value to it, more than $2 billion. So don't look at companies that don't even have revenue like CoreWeave. Sorry, don't have earnings. I'm like, wow, what would I rather buy? What's going to have longevity? All right, it's worth $40 billion. It's worth 20 Under Armours. Does everyone know about CoreWeave? No, I don't think so. People who are not stock market related? No. AI? No. Most people know Under Armour. I think it's worth more than $2 billion. That's why I like it. It could double, triple. It could go 5x. It's worth $10 billion. At $10 billion, it's not even that big. It's peers like Lulu. This one's worth 20. It's worth 10 Under Armours. If you ask yourself, is the brand worth 10 if they get the operations right? So in any business, there's three things: people, process, product. This one here, you can see like people are voting like, I don't agree with that. Those pants are making anymore, right? Those sheer pants. Well, the product's not so hot, but even when it's down this much, it's still worth 20 billion. Could Under Armour, with the founder back at the helm, turn it around? Yeah, it's been left for dead too. Yeah, from 27 down to 5, but where it sits right now, 2 billion. I look at Nike. All right, 97 billion. Well, that's potentially what Under Armour could aspire to. It's not Nike today. We all know that. It has Steph Curry, had Tom Brady. It's had lots of things. That's why I like it. That's why when I ask myself, what am I going to regret? I would really regret if it went higher and I sold it all. Even if I only have like a sliver, I feel great when I got a sliver and it goes higher. Like these ones here. I wish I had way more of this one. I only have 1% right now, but I feel great about that 1%. So when it goes higher, I can say, yeah, see, I knew it all along. It's going higher and I knew it. I'm smart. I love feeling smart. I expect to be right when I buy. Of course, I want the best case scenario. I don't want to be surprised though. So I plan for the worst. And when the worst happens, that is my new worst case scenario. I keep moving the goalpost further and further back. Why? Let's read it. It's the top note here. Expect the best. Expect the stocks are going to go up the second you buy it. But what if you're wrong? You can only have one of two things. You're right, you're wrong. And then based on how right or how wrong you are, you can be surprised. But then again, aim to be less surprised, not unsurprised. If you haven't seen this movie before, you haven't seen declines like this before, this hurts. So we always want to be right. However, if we happen to be wrong and we're legitimately prepared for the worst case scenario, it will be difficult for us to be disappointed. Anything better than the worst case scenario means that we should have expected that in that range of outcomes. If not, we need to plan better the next time. And then it should be palatable. All right, so I got the plan, but now what do I do? The worst case scenario is that it goes a lot lower. I have my worst case scenarios here. It only updates once a week. So if it goes negative, I know it's below my stop area here, or below through my target here, like Playboy. So I have to go and look at it. But otherwise, at this moment, I see, based on my numbers that I defined on the weekend before the market opened, that there's 5-2 risk reward on the stock at this moment. I would be selling for $1 in, again, reducing risk for $5 potential in reward based on my analysis. Doesn't mean that I'm right. It just means that's what I foresee. So when I look to the charts, let's look at the next one here too, like Trox. Oh, Justin likes it. I likes it too. Yeah. What happens when it goes down? You're like, well, if Justin likes it, I don't care if he likes it. It's going down. Yeah, that's part of the game. You never bought a stock before and never seen it go down? Anyways, let's look here to the monthly chart. Here's what I'm looking at. So if we go here to say Trox, I'm looking at this current stock. I'll make it easy. My current buy area is at 3.3. We're at 3.47. I'm not a scaredy pants on this one. I'm building the position. I'm only down by what? 8%. It's worth 2.5. I got tons of room to buy. I can triple the position if I want to. Sell some cash, buy some Trox. I don't want to. I'd rather have less of something that's working than too much of something that's not working. These haven't worked well enough yet to earn their spot at the top, which is they work for free. I'm like, Tilray, you're a really great company, done really good for me. Lately, dragging down the team. I'm gonna have to fire you. I'm gonna get out of here. For Trox, at this exact moment, 7.2. So for me, the way I try to formulate this, again, I'm a robot secretly, in case you didn't know. So when I go here and ask myself, okay, well, I own Trox. First of all, would I buy it again new? I did. I bought more of it. I de-risked 2 other trades. I bought more of that one. So of course, yeah, I would buy more. If I wouldn't, then I have to manage the position. Something went wrong. We should not be able to buy a great company at a good price. Something went wrong. So if we can, we have to understand what's the turnaround. So in this example here with Trox, it's different. Again, same percent loss roughly, 0.3, 0.2, 9 and 8% loss. So it's the same thing. It's roughly basically the same position here, but this one has a realized loss. I feel differently about it. So my other biggest loser, I'm looking here and thinking, okay, well, if I sell it and again, so if I sell all of it and it goes higher, right now I'm telling myself that you're going to give up $7 in reward for $1 of risk. Are really that big of a wussy? Come on, you got like 10 cents on the dollar at work, 13 cents on the dollar at work. Come on. That's my point. I'm willing to tolerate up to a 1% loss on the portfolio per position. That's it. If I buy 7% now and it goes down, I would have tripled my loss. I'd be at 0.6. I can't tolerate reducing the level more if it happens to blow through it, like I did with Under Armour. I can't realize a loss, let it go lower, than buy back. I have to manage it differently. I'm trying to manage my portfolio the way that works for me. I know myself. I feel great at the high. I feel way worse at the bottom. I feel like a dirtbag at the bottom, like I mentioned. I feel terrible. Maybe it wasn't over, right? Stocks aren't for me. So there stinks. I sell everything. Nope. I'm trying to be real today. I'm trying to make it longer. So if you're still watching, you probably want more today. So in this one here, it's not time to sell first and ask questions later. At least not for me. I sold a long time ago, at least in this account. And if we go back to here now, so I got 0.2% loss. If I double the position, I reduce my loss by half. It's going to be -4. My weight will be 5. Let's pretend here I just go to my current average. I double it. My loss will be reduced by half because I'm break even on the other one. So -8 plus 0 equals -4 divided by 2 when I average that out. So now when I tell myself, all right, what if it goes up? Ooh, I'm going to really regret that. I'm going to feel terrible. Yep. Remember, I said as a 10x for it if it goes down. Yeah, I'm prepared for it to go down. This is actually where I like buying. I like buying when no one likes it. People don't like it. I like the company. Great. Let's get in there. Let's buy. Why? Market doesn't move on logic. It moves on emotion. So when I go through here, like I think there's a quote here. Yeah, here you go. When's the right time to buy? When you don't want to. I'm a bottom feeder. I like buying at the bottom. Look at Trox. Does this chart look attractive to you? Does it look like if I told you, hey, I like this company, you're like, I bought this thing a couple of years ago. It's a piece of garbage. Not for me. I love it. I don't own it. I have none of the baggage. I see the volume. Great. Looks like it's maxing out. Everyone's sold. Stock's not going to go up. It's not for me. Yeah. The crowd sells pain and buys comfort. They rotate to something else that's going up. The professional does the opposite. So I can feel for the people who sold into here. They probably bought a lot higher, 10% higher, 50% higher, they lost 90%. I'd be pretty pissed off too, but that's where there's opportunity. So in this one here, of course I would buy more. My system happens to like it too. I'll try this live today, but maybe it's not going to work. I'll try it anyways. Let's go here. So, because we're resetting our accounts right now. So if I go here to say ideas, I can type in, say, Trox. Let's see if it shows up as an idea. No. Let's go to radar. Yes. So right now, it's due for an alert. For me, for you, this might mean nothing. For me, it means everything. It means that right now, Trox is due for a one month alert. And we still have to rally by 21% to get there. We have to rally by 21%. The numbers aren't filled in. I'm sorry about that, but I know the risk reward right now. That's why I front ran it to get it into here. I see roughly $7 in reward for $1 of risk. So if I flip a coin and I make $7, and when I lose and it lands on tails, I lose one. Well, that's how you make a lot of money. I'm learning this recipe. Trust me, it's not easy. Trading simply is not hard. But the reason why Warren Buffett gives all his lessons out is because even with his exact playbook of finding value and buying value, people don't do that. They like to move fast and break things. So in this one here, it's telling me I have an idea for the next year. This specific chart right here, my system says, hey, I think if it stops going down, it could go up. If it goes up, it could go up a lot. Where? Well, where was it oversold? That's called mean reversion. So if, like on the Tesla chart, it goes all the way down and then it reverses, well, what could that look like? Oh, something like that, maybe. It could go back to 20. It could go to 0. That's how stocks work. There's a limited downside, in my opinion, because from 3 to 0 is a lot less than from 3 to 20. I like 3 to 20. That looks good. That's a 7x. Oh, it is. Yeah, it is. So if now I understand that when I buy it, I'm asking myself, all right, well, for this specific one right here, I'm nibbling in for the first time. I scaled in more this week. Yeah, it's down today. I regret that. I should have bought it today, not yesterday. Anyways, this is where I don't do anything because I'm building the position. So I don't regret if it goes lower. I told you my predefined pain for me to feel like I'm a loser is 1% on this one right here. I'm at 20% of my pain threshold. So what do I do? Well, I'm at 20% of my pain threshold. Yeah, it stings. Cool, shake it off. On these ones here, it's at the end of the trade. So if now I go back to here to try to round it out, if people want to go back till raise, it just starts breaking down. Oh my God, I can't believe for the first time I get to buy the dip on this one here. It's up 200%. I've been waiting forever for the dip. Cool, here you go. Take my shares. We just started going down. Permable. I'm not a permable. No, I like making money. Starts going down. It doesn't matter how good it did for me recently. I'm going to sell it. High, lower, high, lower, high, low, lower, low, lower, low. I'm out. Until what? Until it stops going down. Low, higher, low, high, higher, high, close above the previous high. Boom, we're go. We're go time right now. Fail breakdown on the monthly. It's not broken down. Fail breakdown. Volume climax. We got 2.95. We got 2.96. Hell yeah, let's go. Fail breakdown. The bears broke it, but failed to hold it. Rally back up. Okay. Let's look at one more here. This one I already knew was going to be a loser. That's why I bought 2 shares. I'm like, if it goes to 0, that's okay. But if it goes up, I'm going to make this could make it pretend. Let's pretend I'm right for a second here. Let's say it goes to 23. Boom, makes 0.7% to my account. So the 0.1% that I'm risking, the total size of the trade. Yeah, I know this is a YOLO. This one's a YOLO too. So right, you only live once, but this YOLO can fund the next one. I see better opportunity, even though this is a piece of garbage. Than I'm doing this one here. Another piece of garbage. That's okay. We can make money on garbage. Tony Soprano likes garbage, so let's go. So on this one here, again, 0.1%. That's my total loss. So even if it goes down to 0, all right, well, I was wrong on that one there, right? I lose my 0.2% max. However, if it goes to my target legitimately and I'm actually right, cool. Oh, no, sorry, 23, not 63. Yeah, that'd be great. Okay, 0.7%. That's the trade-off for me. When I'm right, I like making a lot. When I'm wrong, I like predefining my risk up to 1% of the total account per loss. And when I feel like, you know what? I really like this stock. It started going down and like, I'm going to buy more just because I love the stock. It's always my favorite. Yeah, that's a lesson I need to learn apparently because I keep making some of the same mistakes. So I'm trying to teach myself and I'm trying to let you benefit from that experience. Hopefully that's helpful. All right, so where are we? Well, we're still above 610. So if the idea of slamming down to the 50 DMA scares you, this is where you have to have a real discussion with yourself. Am I actually going to tolerate a move down to 610? Do I understand what that means? Because we're still above the monthly pivot at 667 or 67. Volume still increasing. It's a monthly inside candle. Weekly inside candle. The daily, we're on the 50 DMA, what I would call support with a gap fill. Plus 50 cents and then a bounce. And we're slightly higher in after hours. Slightly. Is it going to hold? I don't know. I have no idea. All I know is that I know what I regret. I know I'm a wussy. Maybe you are too. Maybe you're finding that out today. Go to the free notes. Fill them out. If you're still watching, do this too. Fill this out here. It's a free quiz. It tells you what kind of trader you are, and it'll tell you what you're predisposed to with you knowing ahead of time, so you can anchor or be prepared for how to manage the worst case scenario. All right, let's round it out here. So, rounding it out means that I think now I've given you everything you need. If your intention was to watch, enjoy the content, digest it, watch again if you need to. Now let's go back to the notes, because what I told you on the weekend for the S&P 500 was very clear to me. It should be very clear to you. There's mixed signals here. That's the reason why I can't give you a clear green light or red light, at least on the weekly. On the monthly, I could. I said caution below 667. We're still above that. At the time we still are now. I warned on Monday about watch this level. I was away from my keyboard most of the day, right? Watch that level. Otherwise, go watch for a gap fill. Oh my goodness, a gap fill? It happened. Don't be surprised next time. Or, sorry, be less surprised next time. Our system even gave you a warning. Watch out for the next 3 weeks. Row, row, row. I didn't like it because the risk reward wasn't great, but it was right anyway. Did chips sell off? Did the NASDAQ sell off? Did the S&P sell off? It did. It did. And that window was 3 weeks. It's only been 10 days. We're a third of the way through the window. Just for short-term mean reversion. If we go back in time, I warned you when we stopped going up. Where could we go? Watch for a gap fill. Rejected on a daily gap fill. A daily gap fill to the upside. We filled this one. Now we filled the lower one. Sorry, this was before. Now what happened here? 665, 50 DMA saved on a close. Watch for that, though. 652 is a monthly higher low. But before that, when in doubt, be patient. We have an inside weekly bar. There is not a actual signal. We're mixed on the 1 day versus the 1 week versus the 1 month. We're still above all moving averages, though. So partial lower wick with must defend the weekly higher low. They did. The bulls defended it so far. All right. The pattern is no longer at risk of breaking. It is broken if we lose that weekly low. It did not happen yet. So tomorrow's Friday, and wherever we close, that is where we're going to get the clue. That's an inverted hammer. What's an inverted hammer? It looks like a hammer upside down. Let's look a little bit closer, and it's full. So what this tells me very easily, again, this is easy for me. It might not be easy for you. We opened here. We pushed as high as here. We went as low as here. We're currently here. The candle's not closed yet. On Friday, it will be closed. So we started here. We made progress as high as here, or the upper wick, the H. But we went down as low as, or fell back. The bulls fell back. Like when you're fighting, sometimes you lose ground. You got to fall back. Look where the weekly low is, though. Look how much room there is between here and here. So if pretend we repeat today, tomorrow, we drop by 11 points, we're going to be on a weekly higher low still. Sorry, if we lose 12 points, then we just lose it. Last week, 661. So if we repeat today again tomorrow and we go into the weekend, are you going to say, oh my God, I did it again. I should have sold yesterday and I didn't sell again today. Then you have to learn how to manage risk. You're a risk manager if you're trying to be a portfolio manager. You want to time the market? You want to pick individual stocks? That is effing hard. That is impossible almost. I am trying to make it easy for me because I am willing to put in the work and I understand my system. If you don't, you need to build a system that works for you. Sometimes that means being patient. Sometimes that means making notes. Sometimes that means doing nothing. Here's the last thing I'll leave you with. Because as we go to the notes here, it's not very helpful for me to say that, see, I told you so. What I'm trying to show you is that my system works for me. If now I go back to here and I tell you how I like to analyze a chart so you can do this on your own, see whether or not anything I lay out with what you should be able to do in 10 seconds aligns with what I actually said in today's video, the actual substance. Are we pointing up or down? Let's look here. Let's be objective. We can put our feelings aside for a moment. Let's hide everything. Well, we're clearly going up. There's the 50 MA. There's the 200. Look where we are. We're way above that. Are you going to tell me that's not an uptrend? Okay, so we're pointing up. That's like easy. It doesn't even take 10 seconds. All right, we're pointing up. Does volume confirm the price action? I would say it does. The last big red candle, we're way above that. The biggest recent bar is green. And as we sell off, it's less volatile. Sorry, it's smaller than the big green bar. Yes. So bingo, bango, bongo. What does the pattern say? What's the pattern? It's an uptrend at all-time highs. Blue sky breakout, inside bar. This would still be the fourth strongest weekly close ever. There's only been 3 weeks with strong closer than this. Ever. Fourth weekly strongest close ever. Second intra-weekly high ever. Ever. We're pointing up, volume confirms, and the pattern is bullish on the weekly. I feel like George Costanza today, like, yeah, when people yell fire, he's like, yeah, get out of here, Granny. Get out of here, Mr. Clown. I got to take care of me. That's sell first, ask questions later. I don't think you're doing that because you're still watching. So there you go. I would just encourage you to go back and do some independent research. Don't take anything anyone says on the internet as being the gospel or the truth. It's not. People usually have an agenda, myself included. What's my agenda? I secretly want to become a master at trading stonks. And I think that if I can explain things simply, easily, and it's repeatable, and you, as an amateur, and intermediate, or someone more professional, can see my videos and find value in them, which means maybe there's a blind spot that you didn't know you had before. Oh, I kind of am a perma bull on that stock. And even though I know I should sell it, I don't want to. I actually want to go buy more. I want to buy in the dip. Oh, thank God, Palantir. Going to buy more. Yeah. Got to average down. What a lucky guy I am. Oh, this doesn't feel. Oh, this really hurts. I'm going to sell. It's going to keep going down only after the trend is already established. And you're not going to believe the first rally. So literally how the market works. So believe the scoreboard. As my article says here. Very last thing. Avoid emotional attachment to narratives, averaging down too early and mistaking a relief rally for a new bull market. Let fundamentals confirm sentiment's recovery before conviction builds. Fundamental analysis tells you what goes on the watch list, and technical analysis tells you when to buy and sell. In most of these videos, when we're looking at the charts, that is called technical analysis. Everything else is me trying to tell you fundamentally what we're doing. I would encourage you to get familiar with both. And if you pair both, you generally have the best case scenario. So what's really happened here? Are we actually going higher on the weekly from the pattern that I pointed out? I would argue we are. We're taking a breather inside of an uptrend on the fourth strongest weekly close as of right now. Even if it sells off to the low of next week, it's still going to be in the top 10. Keep that in mind. If you want to do one more quick favor for me, show up at 8:30 a.m. tomorrow. If you have any other questions, I would be happy to help.